The buzzing one, which has really been cement as a space. What's with the move coming in on some of the cement stocks of late? Who better than Rakesh Arora from GoIndiaStocks.com to put sense into what really is happening with the cement pack? Rakesh, hi, great to have you on the show. Morning, firstly. Rakesh, when it comes to cement, price hikes is a constant trend, and I'm guessing is going to set to continue given the input cost pressure. But how much do you think price hikes are vital as we understand the sector is facing a very, very grave, cost pressure?
So, cement sector, if you look at last 30-year history, apart from the cyclical variation in cement prices normally tend to move in a step-up fashion. So, in 2005-6, you might recall that Indian government had banned overloading of trucks. That had increased the transportation cost by 80%. And that was, in the last 20 years, the first jump in cement prices we saw, where cement prices went up to more than 200 rupees per bag. They were earlier trading at like 120, 130. The second jump happened in 2013 or so, when the then finance minister, Mr. Chidambaram, had brought in a differential duty. So if cement prices were above 190 rupees per bag, the duty went up quite sharply. And that is where, cement prices moved in a second jump. Uh, and currently, as you were rightly pointing out, the cost pressures are immense. Almost in last 1 year, I think the cost has increased by 65 rupees per bag, whereas cement prices have hardly moved by 5 to 10 rupees. So this was, waiting to happen. I think yesterday, cement players have increased prices by around 40 to 50 rupees per bag. And now I think we are heading to a 400 rupee per bag kind of level in India. The good part for cement guys is that once they stabilize the price at a certain level, it doesn't really come down dramatically when it will hover around that level. So, they are trying to pass on the costs, but, prices will stick, and but cost may not, because there's a war premium built into costs right now. So costs will come down. So this creates a very bullish outlook in the medium term for the cement companies. Near term, obviously, there will be cost pressures, etc. But medium term, if they take the price hike and it's probably going to stick, their margins will be much better going ahead.
Also, I'm guessing, Rakesh, demand is that strong that, prices will get absorbed no matter what they are.
See, you're right. Meaning, some demand was pretty weak in the last 3 to 4 months, and that is the reason they had taken so long to pass on the cost increases. However, demand seems to have picked up by middle of March, and I think market is probably reaching a stage where they are accepting that this cost inflation is going to last for longer, and that's why I think the price hikes might stick. May not be this whole 50 rupee. They will be able to pass on at least 25, 30. And if they are able to pass on this 25, 30, I think they'll attempt another one pretty shortly to pass on the cost fully. So demand, I agree with you, is a key variable. But see, there's no substitution for cement also. It's not that things will come to grinding halt. Maybe the demand growth may not be there. So the other factor which really works is supply discipline. So while demand may not be there, but producers can control their supply to balance the market, and that is where there's a chance that prices can stick. See, nothing works like cost pressures and losses. If there are cost pressure and losses, everybody in the industry will come together, and that is what is happening.
Rakesh, hi there, good morning. Now that the monsoon season as well is going to start soon, there is going to be increased demand for the real estate space because construction is expected to peak up. What's your sense?
Yeah, meaning, see, we are into busy season. So first half of the year is normally the busiest season, and it normally lasts till June, July at the max. And then monsoon related slowdown comes in. And then demand starts to pick up again by October, November. So for cement guys, this was the last chance to increase their prices, because post June, it becomes difficult to pass on any hike, because seasonally demand is 20% lower than the yearly average. So I'm expecting more action, in April and May by cement players on pricing.
Okay. Fair enough. I just wanted to understand as well what the outlook is in terms of the overall pricing strategy that you're expecting when it comes to the cement sector. And even if we were to look at the metal space as a whole, you have seen that the index has gained over 70% in 2021. It's been the best year in over a decade. What is the outlook on the outperformance within this space?
See, you can't really compare cement and metals because they are chalk and cheese. Cement is more domestic, and there's easy to control in terms of supply, etc., to balance the market, and that's why cement trades at a much higher valuation as compared to metals. So cement, as I said, the medium-term outlook has actually brightened because of this cost push and the price hike, which they've just announced, and probably they'll take more on. So I'm more bullish on the medium term for cement. Metals, on the other hand, is a global demand supply, dynamic plays out. And there, the medium term outlook has actually deteriorated. The reasons for that is one, because of this Ukraine war, etc. There's a demand destruction which is happening globally, and already, there are GDP cuts to forecast happening. So almost like 100 basis point GDP growth slowdown is anticipated because of this war. Number two is that everybody's talking about the U.S. Rate hikes and the U.S. interest rate inversion on the charts, which is a pre-indicator for recession. So probably things are going to slow down. U.S. Fed was behind the curve and probably might overdo things, which might give us into a hard landing. Number three is that China is no more the force it was. Plus, they're battling all this COVID-related lockdowns. So China normally used to come and save the world with increased spending. This time around, they are fighting a different battle altogether. There's a chance that China might actually start exporting a bit more, given that the domestic economy is so weak. So to support the GDP growth, they might do more exports. So while metal stocks are all bullish at the moment, and I would think there's a time to reconsider. Especially, the non-ferrous, the aluminum stocks are pricing in a much higher aluminum price than they have, delivered in historically in the last 5 years. So probably the scope for, valuation re-rating for aluminum stocks is very limited. Steel stocks, they were under pressure because of high coking coal prices. So there's still a little bit of play in steel stocks, but generally I would say that, metal complex probably have delivered very strong results, and now it's time to consolidate from here on.
So you're basically saying that non-steel stocks have topped out. Is that the larger message then?
Yeah, see, specifically you're talking about aluminium, and aluminium is a guzzler of energy, meaning it requires around 18,000 units of power to make 1 ton of aluminium, or simply speaking, 3 tons of coal for 1 ton of aluminium. So when coal prices have shot up, obviously that is reflecting in aluminium prices. But as I said that, oil has cooled off a little bit, coal is coming out. Aluminum prices are also falling. They have dropped from a peak of 4,000 to now $3,300, $3,400. Probably it will go down to 3,000 or even lower. So I'm saying that, and if you look at the valuations, they are factoring in, like 3x or 4x margin of what they were doing in the last 5 years. So already, stocks are discounting a much higher aluminum price, and aluminum price itself seems to have peaked out. So I think, time to take some profits there. But for steel, the margins had dropped quite significantly. And now probably they are a little bit on the mend. So steel is still well supported. Valuations are not too expensive in steel. So I'm saying that you can still hold on. But overall, as a metal complex, the medium-term outlook has deteriorated from what it was pre-war.
Okay, so you think that the outperformance might be coming to an end. In fact, more than outperformance, it turned out to be a super performance, right? When you look at the Nifty Metal Pack. Rakesh Arora, my final question to you. You said a lot about how opportunities exist in steel stocks. ETFs, we've been talking about that with a few of our guests. One of our global guests recently said buy copper, another one said nickel. This is where the opportunities have come. How are you approaching ETFs right now?
Meaning, see, difficult to comment on individual this thing, but see, most of these things tend to move in a pack. So the call that we are making is, buy more domestic-oriented commodities and sectors, and reduce your exposure to whatever is global, because global is going to go through a much larger pain, and domestic, there's still chance they'll pass on the inflation and cost hikes, etc. So broadly, I would say that focus domestically than globally. That is the call. It's difficult to go into individual things.
Rakesh, always great having you on the show, and good to get in all that perspective on cement as well as metals too.
Thank you.
Thanks. Okay.